also have a look at grain markets this week with North Dakota State Extension economist Frayne Olson. Frayne joined us Thursday morning to dissect corn, soybean, and wheat markets, but we started by asking for his thoughts on current crop conditions across the United States.
Well, if you look nationally, in particular focused on the Midwest, the crop conditions seem to have stabilized right now, and of course that's putting some downward pressure on prices. The expectation is that any kind of yield drag may not be as great as we had expected. The weather forecast, extended forecast as we look forward, call for pretty much normal conditions. So even though we've had some problems not only getting the crop in, but at least getting the crop established, especially in the southern and central parts of the Corn Belt, the northern and western parts of the Corn Belt have a really nice crop coming right now. And so the stabilization of the weather forecast is really helping put a little bit milder tone into what we're looking at for prices.
Let's go through each of these three markets, and let's start in corn. What right now is affecting corn, which is comfortably sitting below $4?
Yeah, and of course we've had quite a nice rally in the month of July. We've had this now retracement, and of course the rally was because of the concerns on the production side. We have a comfortable margin from carryover stocks from last year in the corn, but those carryover stocks are not necessarily burdensome. At least that's not my look at it. And so we still need to have a pretty good corn crop in order to maintain price levels. So the expectation now that the weather has turned, that hopefully as we go into August there won't be any major heat problems, any drought problems. You know, that's putting building some expectations that the corn yields may not be as bad as we thought they would be. So total corn production, even though there's still a hotly debated topic, we'll wait to see again what happens in August.
Let's move into soybeans right now, also sitting below $10, although the August contract is flirting with it today. What do you think is moving this one?
Well, again, very similar to corn. There's a lot of focus right now on kind of the yield expectations, what kind of average yield we might be looking at. August being a critical month for both flowering and pod set on the soybeans. The other thing that kind of impacting or spillover is kind of the large crop that we've had in South America. Some pretty stiff competition in the world market right now for exports, especially into the Asian markets. The currency values are kind of favoring some of the South American shipments rather than North American shipments. So as we start transitioning into harvest, I think we'll start to see some of our export pace pick up. The big question is, will it pick up to levels that we really need to get rid of a fairly large crop?
How big of a deal is what's happening in China right now and the spillover we saw to the U.S. stock market earlier this week?
Yeah, psychologically it's a big deal. You know, again, there's a large portion of the investors that we have in the commodity market coming in from the financial community. They start looking at what's going on not only in the finance but also on the commodity side of things, and their mentality, their psychology about what they think the future will bring can have a big impact on grain prices. When I look at things, I think they have a fairly short view of kind of outlook and time frames. From a market analyst, from a production side, I'm looking at it a little bit longer term. And I think fundamentally the U.S. economy in particular, but even some of the Asian economies are not as vulnerable as I think some of the stock market numbers have provided or have shown us.
Let's move to the last commodity, and that's wheat. Where do you think wheat is residing right now?
Well, to be very honest with you, I hope we've seen the low in wheat. We've seen a very large retracement in wheat. Again, the expectation for a long time we were concerned about the production numbers coming out of the winter wheat belt. There's still some quality concerns, but it looks like the yields were about where the trade was expecting. We're getting some crop quality tours here in North Dakota going on now, and we've got a fantastic wheat crop coming. Lots of bushels, very good quality. We may have a little bit some protein issues, but it looks like at least in the northern plains we're going to have a very good wheat crop, and that's putting again some psychologically down pressure under the wheat.
The August crop report comes out on the 12th, Frayne. What should we be looking for?
I think the major focus of the trade is going to be on the production numbers, not so much on the WASDE or the supply-demand estimates. The production numbers are going to be the real big emphasis, because in August that's the first month that USDA actually does objective yield surveys. So they actually have people go out in the field, try and make an estimate of what yields are. So that's a real first kind of field test for what we think the yields are going to be across the U.S. And the trade puts quite a bit of weight on that just because it is a much more hands-on approach to trying to estimate yields than we've seen in the past.